Howdy, Jacob here. Today we're looking at Cargurus, ticker symbol CARG. We see that they are a $2.6 billion market cap on $2.2 billion enterprise value in the interactive media and services industry. They are an online automotive marketplace connecting buyers and sellers for new and used vehicles that have been around since only 2005. So, pretty new company. Return on invested capital in history has been low double digits, which is very likely well above weighted average cost of capital. So good production of business here. Gross margins have actually gone down quite a bit from 10 years ago, or I guess 7 years ago, from 96% to 39%. But the operating margins are now positive. So we're seeing 6-7% operating margins. Let's look at their income statement. We see that shares have gone up a little bit, but we are also seeing net income up a bit, revenue up a lot. Okay, all positive, mostly positive stuff outside of the rolling 12 being quite a bit lower in 2022. That's likely just because used cars were an asset that was actually gaining money, which never existed prior. Usually cars are a depreciating asset, but we were not seeing that due to supply being as low as it was. And so that's one call out there. So we'll see very likely a rebound or a reversion back to the mean, as a lot of people like to say. So 470 million on the balance sheet of cash and cash equivalents with no long-term debt, no short-term debt. So a huge amount of cash on hand, and more cash on hand than their total liabilities by $314 million. So very healthy balance sheet. Capital expenditures are very low, great production of cash from operations, and they have a heavy amount of stock-based compensation, which is increasing their shares, but is also increasing the ownership of insiders. So it can be a decent thing. The use of cash, I guess it's just been building up, huh? Yeah, it looks like they've just been building up their cash reserve the last 5 years from 35 million to 470 million, because they invest a little bit in acquisitions. They've divested quite a bit over here, and then a little bit more recently in stock, repurchasing stock. Okay, so I wonder if they're thinking of a big acquisition soon or what. But for me right now, oh my gosh, this growth is crazy. Again, the growth is dropped from 1.6 billion in 2022 to a rolling 12 of under $1 billion. So it's dropped quite a bit. Do I still think there's growth ahead of them? I absolutely do. So maybe I'll put in 8%. But I do think that there are a lot of companies out there that are connecting buyers and sellers of vehicles like Carvana and CarMax and such. It's actually interesting that Cargurus return on invested capital and earnings are as positive as they are, because Carvana is absolutely not the case there. So there must be some different member-to-member ways of selling and such. Maybe they just take a bit off the top type of thing. They don't actually hold any inventory, which you could actually see from here. Yeah, it actually looks like that. So that could be the case. They really just connect buyers to sellers and then maybe take a fee off the top. And I presume that's what goes on here, because it looks pretty great in comparison to Carvana and stuff. Is it moat status though? I don't know if I could say that. So I feel like I'm comfortable with that terminal P and price free cash flow at the end of 7 years. For margins, as always, I'll probably do an average here, maybe 10-12%. And then they have been buying back shares recently, saying that maybe they'll buy back, what is that, $50 million in shares, and then hopefully use the rest for reinvesting back themselves, making acquisitions. Since they don't have any long-term or short-term debt, we're leaving a lot of money on the table to hopefully reinvest, which could actually maybe I'll increase these with the presumption that they have a lot of money left over to really make acquisitions, reinvest themselves, and um, that will increase both the revenue and the P's, because at the end of 7 years, um, it could be different, but they should still have some growth ahead of them, and then the capability of growing. Maybe they have a little bit of a moat and such. And so for me, I think there's a good amount of growth in this company left. I think that there's still growth in the margins for them, with margin expansion, and I just want to see what they use their cash for, because they've really just been hoarding it recently. And so hopefully everyone enjoyed the video, learned something, and is a nice in conjunction review with your own analysis. Thank you.